Hello, everybody, and welcome back to the channel. My name is Filippo, also known as CF Crypto TA or Crypto Dante on Twitter, and we are here today to look at the Bitcoin price. So, what is going on in the market, guys? I am a chartered market technician level one. I am studying to become a chartered market technician level two, and hopefully, in less than a year, I will be a fully qualified chartered market technician. As a chartered market technician, we love and we look at the price action. So we use technical analysis to give us an understanding of what is going on in the market and whether it's a good time to buy or to sell and to profit from the market. Okay, so as a trader and speculators, we want to profit from every asset we invest in. Okay, so obviously, I really believe in the in crypto and in Bitcoin. I really believe the technology is the future, but that's another story. We are here to actually look at the price action. So once again, I want to say thank you so much to all of you for being here. Okay, and I hope you will subscribe to the channel and hit the notification bell to stay tuned and up to date with all my video and stream. Okay, so let's get into it. So we can see that Bitcoin has been in a very strong uptrend for the last 12 years. So we can call it a secular uptrend, bull market. Okay. So as a market technician, I like to start my analysis from the top down direction. So we start looking at the biggest and highest time frame. So from the monthly, we go down to the weekly, daily, and intraday. Why do we do that? Is because we want to track the trend. We want to understand what is the closest trend to the short term, okay, to better understand and to not going against the trend, okay, because the trend is our friend, and we make money riding the trend, not going against it. Okay, so the probabilities, okay, because technical analysis is based on statistic. Okay, the probabilities are higher to be profitable when you trade with the trend than against it. Okay, so let's have a look again. On the monthly, we can see we have a strong uptrend, and we use a really basic technique to track the trend. We use a channel. Okay, so why do we use and how do we use it? We use a channel because it gives an understanding where is the base of the demand. We can see that the lower boundaries is the base of the demand. Okay, and we basically connect together. Okay, the higher lows, okay, in the past few years. Okay, so we track the reversal point of the bottoms, okay, and we connect them together to create a line, and we can see that the price have constantly come back to the lower boundaries and bounce off of these boundaries. So we can basically hypothesize, okay, that here the buyers will be looking to buy. Okay, so we are actually now really close to the lower boundary. We just pushed off the lower boundaries. Okay, and we can see that we have support on this area. Also, using a channel, we can tell where is actually the real supply coming into the market, and we can see that constantly, okay, over the last 12 years, the price have reached the peak, okay, of emotion around the upper boundaries of the channel, and we have a flash of supply into the market which reverse the direction. Okay, so in here we can see basically the local bull markets and bear markets. Okay, we can see a bull market and bear market. Okay, what we know so far is that the price move in cycle. Okay, so we have different cycle, and we have bull markets and bear markets, which they are fractal, so we can find them in any time frame. Okay, so that's why we are interested to track the trend, okay, over time, and we need to always think about what is our timeline. So uh, if you are an investor looking at the long term, you will look at the monthly. Okay, you see that there is an uptrend. You see that the lower boundary of this channel is a point of interest. So you will be looking to entering in this level. Okay, with possibly stop loss. As a traders and as an investor, you should always use stop losses. This will cover your ass in case you are wrong. We are all wrong, okay? Sometimes there is no such a way, such a thing like being 100% right all the time. It's a game of probabilities. Okay, so trading is a game of probability and investing as well. Okay, so we want to be on the side of the highest probabilities. Okay, so we have here, if we look just from the monthly, okay, as an investor, I will look at this area. Okay, I know that if we break below this area, it means that we have actually technically broken this long term uptrend. Okay, so where is the point of invalidation of my hypothesis? My hypothesis is that the price will bounce over here and keep going up, and I will target the other side of the channel. Okay, so in this case over here 200,000 and so on. So the hypothesis is that the our invalidation point is below the channel. Okay, so we will place the stop losses over here. So in case the price keep falling off, and we know that this will probably give us a continuation of the downtrend, and we will cover our S. Okay, and we will try to protect our capital by placing stop losses here. The stop losses will be hit. I will exit the market. I will have just a small loss, okay? Because professional traders, that's what we do, okay? We place stop losses, and if you see the pattern of a professional trader, it has a constantly small losses. Okay, when you see a trader that is having constantly big losses, okay, that means that he's not a real professional because he's not using a sound risk management of risk money management, okay, strategy. Now, enough of that. I will also use exponential moving average. These are moving averages, which basically are average of a moving average. Okay, so over here we use the 13 exponential moving average and the 26 moving average, and we can see that they work as a dynamic support and or resistances. Okay, so in this case, we can see in the previous bull market, we can see that the 13 EMA has been working as a support. So what happened every time the price was deviating from the 13 MA, it would come back, retest it, and bounce off. So we know that here there is demand. Okay, over all this bull trend, we had demand at the mean price of the 13 EMA. Okay, and we use two moving averages because it gives us trend signals. So the moving average, we can use them only when there is an identifiable trend. We don't use a moving average when we have a sideways price action because it will give us a lot of whipsaw, okay, and fake signal, which are not actionable, and we will encounter in many small losses, which will add up to become a big losses and probably drain your capital. So we first identify the trend, we see there is a trend, and what we will do, we will place trades when there is a crossover or cross below these moving average. So the faster moving average, which is the 13, if it's crossing below, we will place probably a short trade, okay, expecting the price to keep falling off, okay. But now, without dwelling too much on this trading system, okay, because we are not really using this 2MA at this moment for placing trades, okay. Now we go down to the weekly. Okay, we found the fact that there is an hypothesis that we expect the price to bounce at this level over here, and we go down in the time frame trying to understand where are the other point of interest. Okay, just I want to reiterate one key concept. Okay, so we look at the candles, and the candles, we don't look at the price just as a price. We need to understand that there is always a battle between a supply and demand. I like to think about it as a war zone. Okay, so there is always a constant battle between supply and demand. So if we have a black candle, we know that the supply overwhelmed the buyers, and we close the price lower than the opening. Okay, so the candle opened here and we close over here. There was more supply and less demand, and the bears were stronger than the bulls. Okay, so there is always a battle. Now, if we go down and we look at the more closes at the weekly, okay, what we can tell, we can see that there is an important level which is recognizable from the 2017 peak. This one was the close of the 2017 peak, and this point of reversal, like over here, this one here, this one there, and all of these, okay, these become point of interest. Is where we expect a possible support will be placed in the market or resistance. Okay, so we expect there to find support, the price to find support or resistance. What does it mean? It means that the people, okay, which didn't enter the market over here, okay, will then look at this price, okay, price level as an interesting point to buy. Okay, so we expect the buyers to basically come in and try to push the price higher, but we need confirmation, so we need to see that there is actual demand. So if we have actually just black candles, long black candles with a real body, which they keep coming over here, we have a close below, then we are not really interested in the level. We can see that the level was broken, there is no real demand in that area. So now we found another level of interest over here. Okay, we can see that the 19, 18.8 or 18.6. Okay, usually they are not just one level, but we have different zone. Okay, so it's quite imperfect the level, and we can say that between 8.6 and 19k, that's a level of interest, level where buyers might come in. So that's where we find our support. We can also see that there was a strong support in the area of 28.6. Okay, we broke it back in June, and we can see that the price fall off quite violently on the downside after we broke this support. Okay, why? Because a lot of traders will place stop losses below this level. Okay, expecting the price to revert and start a new bull market, a short-term bull market. Instead, what happened? The bears and the supply was more aggressive. They managed to close below. So all these stop losses that they were here, they were caught and triggered. And all these people that they were here, they took a loss, left the market, and the price kept falling off. Okay. So what we can tell is always supply and demand. Supply, okay, and demand. So now, where is the other closest resistance at this level? On the weekly, we will see that there was this strong week, and we can tell that there were a lot of demand on this area, okay, because the real body was here, the close was higher than the support, and we can see that here there was a lot of people which buy into the asset. And we can see also that at this level, we had a reversal on the weekly, and we had a rejection of this area, okay, where supply re-entered the market, and the bears again push the price back to the support. Okay, so now we have a well-defined resistance area over here. Okay, now how do we look at these two levels? We go down on the daily and we try to see if there are any other levels which might be of interest. We can see that there is another level straight away as soon as we tap into the daily. We can see that the 22,400 level is also a level of interest. Why? Again, because the price came to the support, okay, bounced off, and we can see here we have a bullish engulfing pattern, okay, push, we have an uptrend, bang, we have a rejection of the 13 EMA, back to support again. The bulls come into the market, they push the price higher. We have an uptrend forming again, This level over here, we have a rejection of the previous psychological candle. We have a downtrend. We found support again around the previous support level. Again, this time higher, so we can tell that actually there is strong demand in this area. And we have another bullish engulfing, price push up, close above the resistance level, back down. We have another demand candles, another reversal over here. So even this area will be looked at as a possible resistance. So all this area over here, whenever we will come close to this area, okay, let me find the tool. Sorry, guys. Over here, whenever we come to this area over here, we know that there will be possibly a supply coming into the market. Okay, so people that, let's say, they bought here, okay, and they are now underwater, they will look at this support to probably DCA in, coming back up, okay, and they will want to exit the market because they are scared. They have a psychological fear now at this level where they lost money. Okay, and also people that entered here, they will target this possible area to take profit. Okay, now let's have a look at the really short-term price action. We can tell over here we have a bullish engulfing, which is once again telling us that this level over here, the 18.6 to 19, is a level of demand. We know that the buyers will be looking to coming into here. So what is my hypothesis now? And what you as a trader you would take at this level? We see a bullish engulfing. Okay, so we know that all the people that enter a short over here, okay, they are now underwater. Okay, because the bulls managed to push the price above. Okay, and people that didn't enter here, they are now fearful to missing out. Okay, so what we will do is what I would do. So I know what we will do. I will look at this area and I will look in the intraday for a, a good timing to enter the market. I want basically the price to come back in this area and I expect demand to enter again. So I want to be on the side of the demand. Okay, so I will place a trade, let's say over here, and I will put a stop loss. Here we go. Sorry, guys. Let's say I'm happy to enter here. Okay, I will place the stop loss just below the low of the bullish engulfing. What we know is that usually the low of any candlestick pattern, okay, the low wick, will then become the ultimate support of the trading idea. So if the market managed to close below, then we know that we are wrong and we expect the mark to keep falling off. And now what we will target. So we have different target zone. We have the zone over here, okay, as you can see. We have a strong battle over here. We see that the rejection here, supply coming. So this one would be my first take a profit. If we use the intraday, I would probably profit even this area over here. But let's say we use the daily, okay? So I will profit first over here. I will take profit here, and then the ultimate take a profit will be here. Obviously, this one is a short-term trade. However, if we are looking to time the market and entering for a strong bull market. Now we know that we are in the lower boundary of the channel. So this is our hypothesis. I expect here to the bulls to enter the market, okay, at this level, okay, as it happened in the previous years, okay, and the market to start a new bull trend. Okay, now I will go into the hourly and 4 hour to create a better timing, and I will look at the candlestick patterns if there is any other bullish engulfing. if there is any other support and price demand. Okay, so this one was everything for today. I hope you enjoy it, and I hope to see you soon.